Well, ladies and gentlemen, welcome to Grant's Interest Rate Observer Radio. It's good to have you back again, and it's good to have with us today Ann Stevenson Yang, who is a founder and principal of J Capital, which knows everything about China. Big country, lots of people, and lots of renminbi, and we'll get around to that in one moment. But first, ladies and gentlemen, a word from our sponsor, who happens to be me. No time is a bad time to subscribe to Grants, that is for sure, but now just might be the best time. Now when markets are making highs and volatility is plumbing lows, and the SEC in its wisdom is weighing the first quadruple leveraged exchange traded fund. Now, we at Grants are the yes but people. We are skeptics and doubters and first guessers. Whether it's a macroeconomic theory, a common stock, or a subordinated debenture, Grants puts it to the analytical test. And we publish every 2 weeks, 24 times a year, and visit our website and read for yourself and see for yourself. And as we encourage every reader of Grants, think for yourself. Subscribe to Grants. There's no time like the present. Oh, and by the way, we do have conferences. Yes, that's something else. We have one in the fall on October 10th. And guess what? Alan Greenspan will be there, and I'll be sitting and talking with him in person. Evan Lorenz, the great Evan Lorenz, is with us today, along with Ann Stevenson Yang. And Evan, can you believe the lineup we have? We have Frank Brosens and Jim Chanos and Mark Cajotes and Amy Falls and Jeffrey Tarrant and Paul Singer. And who knows who else might show up. It's going to be a fabulous star-studded day. October 10th at the Plaza. Please do be there. Eric Whitehead is at the controls, and Ann Stevenson Yang is joining us today to talk about China. And welcome.
Thank you.
And that was thank you was an English expression, but you could say that in Mandarin as well, could you not?
I could if I tried, yes.
Well, what do you say we conduct this interview in English?
Let's do that this once, yes.
Now, we love your work at Grants because you see things as many others don't. Many people see China as the emerging superstate, superpower, and super economy of the 21st century. And then I guess there's something to that in a way. But you, I think, are much more skeptical about the finance, which is what we want to talk about today. Tell us a little bit about why you are bearish, if I may use that word, bearish on China.
Well, I think I'm bearish on China because I believe that economics is economics wherever you find it. And China has pushed to the very edge of the laws of economics by expanding its monetary system by a factor. China has increased its money supply in excess of the whole U.S. money supply since 2009. China now has 260% of its economy in cash. The U.S., I believe, is somewhere around 75%. China has increased its bank assets by the total number of bank assets that the U.S. accumulated over 150 years. In other words, and that's just since 2009. So those things really cannot stand for long. And the expansion of the monetary system and the bank assets has been matched by a phenomenal increase in asset bubbles and the strength of the renminbi internationally, which is why you can go out here on Wall Street and see lots and lots and lots of traveling Chinese people who are traveling on their very advantageously priced renminbi.
Well, this would seem to be a derangement of finance on an epic scale. In fact, it reminds me a little bit about Japan about 30 years ago. And people observed that among the top 10 largest banks in the world, I think there were 11 Japanese banks among the top 10. That's how big Japan was.
Exactly.
Big and getting immenser, if that's a word. And some people egged on the Japanese bubble, and others cringed at it and worried about it blowing up. And it did, in fact, deflate, starting in, New Year's Eve, 1989. And we all lived to tell the tale. Why can't China, for all its excesses, all its derangements, simply deflate away a little bit at a time?
Japan hardly has deflated a little bit at a time. China had asset prices deflate by as much as 85%.
Japan.
Yeah, did I say China? Yeah, Japan. Starting in, I think it was 1992 that the whole thing really came tumbling down. And so Japanese people got significantly poorer. And consequently, they've been spending less for all these years, which is why you see the Japanese bank just pushing money into the economy and trying to force a little bit of inflation through, and it just never works.
To be sure, all true, but the world did survive it.
The world did survive it. But I think, and the world will survive the deflation of the Chinese bubble. I think China will retract and go back to being a kind of unimportant economic player internationally, the way it was in the 1970s. And the world will survive and go on. But it's quite unfortunate for the Chinese people who might have used all that money to build a robust education system, a health system, and a foundation for future growth.
And you mentioned build, and there certainly is a great deal of building in China. The Asian development model is common, is it not?
It is.
Yeah, but in China, of course, there are storied examples of construction run amok.
State bubble companies.
Yes, please.
For example, yeah. I mean, China does scale better than anybody in the world. And think about it, none of these ancient empires like Egypt, the Mayans, the Persians are left except China, these great centralized empires that can draw money to the center in this big crank and build huge projects like the Great Wall or the Grand Canal. So China is really still doing that. It's just sort of farmed it out to private hands. So among those hands are some of the great real estate companies of the modern era, the Vanke's and the Wandas and the Evergrandes. Evergrande, I would say Evergrande is sort of my favorite because there's no company that plays to the bubble the way Evergrande does.
This is a company, a private company in China listed.
Exactly. It's listed in Hong Kong as 3333. It's also listed in little parts of it within China. And the ultimate goal is to bring the whole thing back to China, but that's not going to happen this year, I think. So Evergrande, it listed in 2012 after making a run in 2008. The chairman of that company takes big risks. He enjoys gambling, and he often builds up these threatening sort of pyramids of debt that threaten to topple over on his head. In 2008, tried to list the company in order to take care of that and pay for a big chunk of land that he'd committed to. Failed. The odds became greater and more desperate, and then in 2012 managed to get through, and ever since then has been expanding like mad. So this is a company. Yeah, sorry, go ahead.
You've called this the greatest pyramid scheme the world has ever seen. Now that is some pyramid scheme.
That is some pyramid scheme, but think of the scale. I mean,
tell us about some of the numbers. So how many buildings do they own? How much debt do they have? How great is their scope within China?
Well, their total liabilities, Evergrande is a special case because it has on the book and off the book liabilities. The total liabilities on the book at last report were 1.5 trillion renminbi. Trillion, that's with a T.
In dollars, that would be about divided by what, 6.8?
About 6.8. So 150, something like that, billion US dollars. Now, a lot of that is for future construction, for land payments that they haven't made yet. Some of it is straight up debt. But then off the books, in agreements with small trusts and private equities and banks and other types of financiers, they have many hundreds of billions more. And they've used this to build these massive yawning complexes around the country. Their strategy is to go to the edge of new cities, because China has these purchasing restrictions in cities where they only allow registered residents to purchase a certain number of units. So what they do is they go right outside the edge of the city to where the purchasing restrictions no longer apply, but you can still claim to be sort of in the city. So their big project that they claim is in Shanghai, for example, is a roughly 2-hour drive from Shanghai in a place called Qidong in Jiangsu. And they build these complexes with villas and towers and supermarkets and movie theaters and gyms and so on and so forth. And then they pre-sell usually about 2 years in advance of construction. And then they sell out and nobody moves in. And these complexes will accommodate 10,000, 40,000, 50,000. I've seen one complex that accommodates almost 70,000 people. I think that one is in Yunnan. And people hold these apartments. They'll come and visit on weekends sometimes, or they'll keep them for their parents or their children, and they wait for them to appreciate in price.
Texans were wont to say, and some still do say, that real estate is not a cash flow business. It's an asset appreciation business. But if there's nobody in the apartments, that means there is no cash flow for somebody. Now, how is Evergrande funding itself in the absence of this thing called cash flow? Or are they funding themselves on key money or prepayments? So how does this work?
Prepayments are a very big portion of it. If you get paid 2 years in advance, and that can finance your construction. Debt is a big portion of it. Their own stock appreciation has helped a good bit. They've been raising money through an insurance subsidiary that they have that was originally registered in Chongqing, and using that money to buy their own shares, which they can then hypothecate for more debt. That's a pretty classic Chinese strategy. The thing that's so interesting about Evergrande is that you walk through these complexes that sometimes have people in them, very often are mostly empty, sometimes are completely deserted, and yet they will be sold out. And often the sales offices will be full of people signing contracts, and those same people walk around these complexes that I see as empty, distant from the cities, unserved by local retailing, certainly with no entertainment opportunities, usually with no particular highways or rail or no access to the cities. What I see is this rather desolate complex built up with all these towers. And what the Chinese buyers see is a future when it will be filled with middle-class families.
You have written a terrific report on Evergrande, and one of the things that struck me is as you put it, the sprawling collection of assets from bottled water to vegetable oil, milk, grain, media, health, financial services, and a soccer team. So it's not just building empty apartment buildings.
Well, I mean, this is the thing. At the same time that all these Chinese middle-class prospective buyers are walking through the showrooms to buy these Evergrande apartments, the Evergrande management themselves are thinking, well, I really ought to diversify out of real estate. Real estate is over. So they've been driving money into, milk, oil, food oil, the soccer team. The soccer team, I think, was probably more of a debt arrangement than anything else. Because what happened was they owned a soccer team. They sold half of it to Alibaba. And then they listed the soccer team, so presumably Alibaba got their money back.
Well, this report, again, this very terrific report concludes with the following. With a massive load of residential property that is unoccupied, poorly located, deteriorating, unlivable, and ultimately unsellable, carrying valuations equal to the toniest neighborhoods of London, New York, and San Francisco, the Chinese economy is far, far beyond the point where deferring a crisis gives the leaders an opportunity to inflate or otherwise ease their way out of the deep hole into which they have descended. So there is no way out for China?
There would be if China has this odd point of pride in holding up the value of the renminbi. And a lot of that is for domestic messaging purposes, because the leadership wants to be able to say to the Chinese people, we are a strong country. We're not like Russia, which depreciates its currency by 40%. You can travel around the world. You can buy things. You can be proud. But the problem is you can't double your money supply and keep the same exchange rate. It really kind of just doesn't fit with the laws of physics for long.
When? Evan Lorenz is sitting here. Evan is the staff sinologist. His Mandarin is not so fluent as yours, Anne, but he is. I think you were in China when?
2 years ago with your partner.
With Tim, yeah, I don't exactly remember. Well, I would bone up for a week before debating Evan, so I wouldn't worry about the Mandarin.
So it is said that the greater your distance from China, the more authoritative you can sound. But Evan has done some first-class work for us on China, and I know, Evan, you have some questions for Anne as well.
Yeah, my first question really is, A giant credit impulse that China started in 2016 lifted commodity prices around the world and led to really strong Chinese economic growth in the first quarter. It also kind of lifted the fortunes of a lot of emerging market countries that are keyed into the commodity complex. In recent weeks, we've seen indications of problems in the bank system. For example, the 5-year government bond yield is now higher than the 10-year government bond yield. The 1-year Shibor rate actually topped the 1-year prime loan rate, which means that it's cheaper for companies to borrow from banks than it is for banks to borrow from one another. And commodity prices kind of rolled off. What's happening?
So what's happening is the authorities are trying to there's the problem writ small and the problem writ large. The immediate problem is that over the period of the stimulus since 2009, the interbank system has metastasized into a massive sort of souk for cash for the whole economy. You have now more than 10,000 organizations that are qualified to borrow in the interbank market, and many of those may be subsidiaries of property developers or other financial institutions that don't really have that much credibility. So what they've been doing is they've been going into the interbank market and borrowing 7-day money at, let's say, 2% and rolling it for 2 years. And the interbank market really can't default because that would be terrible and systemic. So that really annoys the authorities. They don't like all these sort of substandard institutions borrowing and rolling in a way that the interbank market is not designed for. So they decided that rather than disqualify people, because that's hard, and they've already just recently issued all these licenses, so it's messy, instead they'll drive up the short-term rates and make it harder for them to do. So that's one reason. There are other reasons as well, but that's sort of the proximate cause. So they've been trying to inch up the short-term rates, sort of 10 basis points a month. The problem is that as soon as you do that and you start to contract the money supply, not contract, but reduce the volume in the interbank market, then you start running into liquidity squeezes and defaults. And defaults are verboten in China. So as soon as there's a pending or a possible default, they send off this fire brigade filled with cash, and they go whoosh with a huge cash hose on whoever the culprit is. So they don't actually end up, tightening liquidity, except they're trying, they have more control over the liquidity from the central bank. So anyway, that's what's going on now. And it's creating this drama of sort of, tightening and loosening, and greater volatility and greater anxiety generally, and more general difficulty for the private economy to get cash. I forgot what the question was. Meanwhile, did I answer it?
It was a heck of an answer, though, Anne. Tell us about the interplay between the so-called private sector and the Communist Party. People are wanting to say, well, nothing bad is going to happen pending the November powwow.
Party Congress.
Party. So what about it? I mean, this also speaks to the question of when will the denouement arrive? But do tell about the Communist Party first.
Well, there's always a target, isn't there? There was the Olympics, there was the Shanghai World Expo, there's the Party Congress, the 18th, now there's the 19th. There's always something because the party does its best work when it organizes around campaigns. However, it is a very important meeting. And going into that meeting, part of the dynamic is this argument between two sort of broadly writ factions in the party, one of which says, we have to stop this. We have to start, directing money to the real economy. We have to get growth. We have to find a way to growth that's not entirely dependent on new capital. I mean, China invests well over 40% of their economy every year in order to capture that supposed 6 point whatever it is, 5%. Which honestly is overstated by quite a bit. So that's a very large ratio, right? So they want to bring that down. So one group says, well, we can do that, and there are some ways to do it. The other group says, no, we can't actually, and we still have the ability to accept more debt, so let's just do that. So they kind of careen back and forth between these factions, and China's political system being a kind of vague, sort of consensus system, that nevertheless has very high stakes, so people can be very sort of brutal about achieving that consensus. People have to use fairly covert or somewhat coercive means to achieve their points of view. So that's one thing that's so I believe that there's sort of corruption. I don't know whether you'd call it a crackdown, but there's an initiative to attack what's articulated as corruption in the banks. And I think that this is supporting this general effort to try to stop stimulating a little bit.
To what extent can the party actually control things? I mean, when you read a lot of China narratives, they basically say, well, Xi Jinping controls the country. What he says goes. Every 5 years, they come up with a new plan, and they deliver on it. And there's this belief that there's this ability to direct this 1.4 billion, person economy that has $34.8 trillion in banking assets, and that they can just direct everything and it'll all go according to plan. Like, what kind of grip does a party really have on the economy? And are they able to direct things as smoothly as kind of the Western press believes?
Well, conveniently, the party also controls information. So what they do is they direct our attention to the little ball in this hand instead of this hand. So when we articulate these 12 goals in the 5-year plan, if one of them is achieved, then that's the one that gets the attention. And if you look at the goals over the previous 5-year plans, honestly, they've almost all been complete failures. But what the party can do, and it's a very, very powerful tool, is invest. So the party, when it was focused, it focuses on economic growth driven by capital investment. That's been a very powerful tool. It has the ability to aggregate capital and direct it to a target. And so that's what it has achieved. That's really pretty much the limitation of the party's power, investment. So you notice, for example, that environmental control or control of environmental pollution is a key political goal, but they don't have any means for achieving it except for investment. So they get all the state companies to take big loans and improve their equipment to clean their emissions, but beyond that they can't do anything. So the companies run without using the equipment because they can't get the price that would pay for it. So, and the party really can't do anything about that. That's one example.
Well, they do say that when something can't go on forever, it won't. This does seem as if it had been going on forever, and yet also it seems as if it can't. Could you give us, if not the exact date of the denouement, and could you give us like the month and the year?
Yeah, August 12th. It's not 2012. No. These things have what I'd like to think of as a probabilistic path and a deterministic path. So the probabilistic path is there's all this stuff that they have to keep control of. All this stuff being defaults that are cropping up in the economy. And you have this fire brigade that's rushing around with its hose of money, and the likelihood is that you'll miss sometimes. And of course that's happened a good deal, but what you need to miss for there to be a crisis or a default at the banks is something really big.
How about Evergrande?
Exactly. So if Evergrande, now I've been watching Evergrande because Evergrande's insurance company, which was a key channel for aggregating capital, has been halted from selling products for a little while. However, Evergrande has a lot of ability to collect money from other types of shadow institutions, being trusts and private equities and things like that. So it seems like Evergrande's capital is still abundant. But I was watching this because Evergrande needs a constant infusion, really like a patient hooked up to a IV, thank you. And without this constant influx of money, Evergrande will in fact collapse, but it does have this constant influx of money.
Well, what about those immense reserves we keep on hearing about?
That is an interesting thing. Of course, the really interesting question is what is in those reserves and what portion of those reserves are liquid. I think that a significant portion are dedicated to the share of the bank stocks that the central government owns that are listed in Hong Kong. And I believe that they've been gaining appreciation out of the stock appreciation there. A big portion is their loan securities that are outstanding to countries like Venezuela and Angola, and the loans that they've been extending all over the world.
I might write down some of those Venezuela loans myself if I were running things in China.
You would think they actually wrote them up about, it's about a year ago now. But that was because Venezuela clearly was not going to pay. There was a rumor that Venezuela had offered to give them an island in return for the debt, but that China refused. So much of that is not very liquid. They do have those U.S. treasuries, which now number about 850 billion, something like that. I believe that those treasuries are hypothecated to some extent, but they are the key liquidity tool that China can sell up and sell down and buy up. So you've still got, I think that they need to hold around 600 billion in the bank. So you certainly have a good 400 billion to go.
The reserves are a most curious asset. I mean, when I think of an asset, it's something that you could actually draw on in a time of stress. But if China were actually to sell down those reserves, that would actually contract the money supply, which would seem to put the Evergrandes and other money-sucking corporations into a little bit of a tighter stretch. How do you think about the reserves and their ability to utilize them without causing collateral damage?
Well, they've been quite successful at it for a long time now. The rate has only slipped from its peak at 6.0. It's about 6.85 now. So that hasn't slipped that much considering the degree that the money supply has expanded. And a lot of that has to do with selling down the reserves, asking banks to sell reserves. And of course, they print in order to compensate for it. So it's been pretty successful. I think the fundamental question is that you now have this currency where you can take 6.8 of these things and buy BMWs and houses in London and things like that. There comes a point where the London seller and BMW Corporation will no longer sell for 6.8 of those things, and that will force. And the Chinese government has been backing that by regularly exchanging the currency for the money. But there comes a point where the world becomes a little too skeptical of the value of that renminbi, and the renminbi has to tumble.
When does it happen? I mean, China last year not only put in capital controls, but they actually put current account controls, which is, for econ people, a little more shocking. They made it difficult or impossible for corporations to remit dividends that they had earned in China outside of China. I mean, they've really locked down the ability to get money out. It's Hotel California.
Yeah, I think that that's a bit overstated. They have put in place a lot of controls. There's a lot of window guidance at the banks, telling the banks to control the amount of money that they remit by quota. But one has to remember that probably about 70% of capital flight occurs on the trade account, and that is really impossible, pretty much impossible for the authorities to police.
Well, Anne, this has been merely fabulous, and I think my takeaway is that China is a big country, lots of people, lots of debt, and what we need, we China bears, is lots of patience.
And that also about sums up what I can tell you about China, so there you go.
Well, ladies and gentlemen, thank you for listening, and until next time, do return to Grant's Interest Rate Radio.